What's up, guys? Stas here. So listen, tomorrow's Labor Day. The stock market's closed. A lot of you probably already know that, and you were probably thinking to yourself, wait, is Stas going to make a video tonight? It's Sunday. Typically, he makes Sunday night videos, but the market's closed tomorrow. Is he still going to make a video? Well, lo and behold, here we are. I'm making a video even though the stock market is closed tomorrow. We have a lot to break down in this video. 10 stocks, 10 companies, all of which are reporting earnings this week. So without further ado, let's not waste any time. Sit back, relax, take a sip of your coffee, get your 13 stocks from Moo with a $100 deposit link down below. Each of those could be up to $2,000. And don't forget to get your 12 stocks from Webull with any amount deposited. Also linked down below. And with that being said, let's dive into the video. So you all know at this point, the stock market in general has been selling off. We're talking SPY, Triple Q, and stock market aside, crypto has been selling off as well. Bitcoin, Ethereum, even the metals, gold, silver, these have not been doing well over the past couple of weeks, pretty much since the middle of August. You guys know that at this point. And last week in particular, we did see a bit of a rally. Excuse me, guys, on SPY here from 390. That was on the 1st of September. We rallied up to about 401, 402, and then we clearly got rejected. This was on Friday, actually. We had a huge red day, big down move, where SPY went from 402 to about 392. So it lost $10 intraday there. Now it's at a pretty interesting spot. Very important spot for the bulls here, because if the bulls give out at 390, if bears take over there, we take the lows out from last week. I mean, this could go down. We've talked about this on the 4-hour time frame before on the YouTube channel, guys. SPY could end up going down towards 380, 382. I mean, these are levels that it was at just a couple of months ago, not too long ago. And I mean, technically speaking, that's where this could be going on the downside. And for Triple Q, same stuff. I mean, look at this. Triple Q is right at a big support, hanging on by a thread at about 292. That was the low from, I think, Thursday. Yeah, Thursday. Let me get some coffee, guys. I'm freaking choking. We're 2 minutes in. Dang it. Can't even make it 2 minutes in, guys. What's going on here? Triple Q, 292 is on Thursday. Closed at 295 on Friday. I mean, if it takes out 290, where could this be going? We've covered this on the channel before. This could be going anywhere from 280 on the downside. We're talking down to maybe 285. These are levels that are stone's throw away to the downside here. And it's not like we have a huge week coming up with earnings where it's a lot of make or break companies like big tech companies or anything like that. So I'm not looking at this week as there's going to be more downside because of a massive company reporting, but it's at the point where we're starting to get to maybe the peak of inflation, or we're at that point where the next couple of weeks, these next economic what am I trying to say, or these next economic reports coming out, whatever you want to call them, over the next couple of weeks here, they're really going to determine whether or not we accelerate, in my opinion, to about 269 or 270 on Triple Q, which was the low from the middle of June. SPY, is it going to accelerate down, or I guess, you know what I mean? Yeah, accelerate down to 362 where it was about 2 months ago, 2.5 months ago. So we're at that point where it's time. Maybe not time yet, but you know what I mean? We're at a point where it's going to be, we're going to need to see these numbers and how, the Fed's going to react and so forth, because right now we're getting a very hawkish stance from Jerome Powell, and rightfully so, because inflation's still very high, very, very high, and it's not really showing any big signs of a cool off, to the point where it's going to get down to 2 or 3% again in the short term here, which is the Fed's target range, about 2 to 3%, right? So this week's going to be it's going to be a big week, even though we don't have tomorrow to look at because the stock market's closed, but we do have Tuesday, Wednesday, Thursday, Friday, and we do have 10 companies that are reporting earnings. So what do you guys think? I mean, do you think heading into the end of the year, and that's another big thing here, we're heading into the end of the year, we're heading into the holiday season. I mean, there's a lot going on here. That's going to be coming quick. Thanksgiving, Christmas, right? It's coming. It's right around the corner. So What do you guys think? Are we going to end off the year, these next 3 months, 3.5, 4 months, whatever it is? Are we going to end off the year strong, or are things going to deteriorate even more aggressively heading into December, January? What do you guys think? Let me know your thoughts down below in the comments. For me, I'm kind of data dependent at this point. We're gonna have to wait and see. And of course, I'm gonna talk about this stuff every day on the channel. So if you haven't done so already, make sure to subscribe and feel free to hit that like button if you're finding value in this video, because now we're gonna get into the meat and potatoes of this video. We're actually going to dive into these 10 stocks. So don't worry, guys. Strap on your seatbelts, get ready, because we're going to talk about Docusign. Docusign's number one. DOCU is the ticker. They are reporting earnings, I think, on Wednesday, 9/8. What's 9/8? So what is that? Thursday? Whatever. One of these days, on the 8th of September, we have Docusign. And talk about a destruction, in the stock market. You got to look at Docusign, guys, from $315 to now $53 a share. The stock's down over 80% from all-time highs. And of course, I think this is one of those, of course it was one of those hyped up stocks during the COVID time period. I think Kathy Wood was hyping it up. She owned a bunch of it. I'm sure she still owns a bunch of it. And again, it's down over 80%. So they're reporting on the 8th, which, let me get these dates right. So today's the 4th, Sunday, Monday's the 5th, Tuesday's the 6th, Wednesday is the 7th, Thursday's the 8th. All right, we got that out of the way, guys. Thursday is the 8th. That's when Docusign's reporting, probably after the bell. Yeah, after the bell, and clearly it's in a downtrend. No signs of a reversal. So for me, in fact, it just hit a fresh low a couple of days ago. We're under the moving averages. We have a death cross. For me, I'm staying away from Docusign, but I'm still tracking it to keep up with it, to see what they report. And we'll see if there's any moves coming from there, or we'll see if there's any different price action after that. But as of now, my gosh, Docusign does not look good. And Kroger's the second one, which this is one that we've called out time and time again on the channel. Not recently, but a couple months ago. Really, it was more towards the beginning of the year where we were talking about Kroger. And they reported a couple good quarters back then, or really it was just one, where the stock went from $45, guys. I'm sure you guys remember this, and it went all the way to 62 in just a couple of weeks. That was a monstrous move for Kroger. We're talking 40%, which, I haven't seen that stock move that much before in that short of a span, but it did. And now it's come down a lot. It's come down a lot. It's cooled off, no doubt about it, from $62. Now it's at 48. It's down 22%. So Kroger is in a bear market. But in the past couple of weeks, really since the middle of August, 2-3 weeks ago, it's been breaking out of the moving averages. We have a golden cross here. And last week was not that bad of a week for Kroger, considering the entire market got destroyed. So I think this one, if we start getting a move past 50, especially the highs from recently, which I don't think they were at 50. Actually, yeah, they're kind of at 50. So if we break that point, 50, 51, the highs from the end of August, Kroger could end up going, we have a gap to about $52.75, followed by $55, and then we'll see where it goes from there. Let's not get ahead of ourselves here, but that's where I could see it getting to. So Kroger's reporting on the 9th, which is on Friday. So they're on Friday in the morning, I believe, right? Yeah, 9 a.m. Central Standard Time, or Central Time, whatever. EPS is looking to be about 77 cents for this company on revenue of $34.35 billion. And I'm very interested to see same-store sales, what's guidance looking like. And I would not be surprised if we do get, maybe they surprise and the stock ends up ripping, because I've seen it happen before. And does that mean necessarily that it will happen again? No, it doesn't mean that. But I'm still looking out for it. Hence why I have my alerts set. I have literally 3 alerts, 50, 53, 55. So Kroger, guys, KR, you got to watch it. Let me get another sip of coffee. And the third stock here, change of pace. Let's change the pace a little bit. we have NEO, guys. Ticker symbol NIO. NEO went down on Friday alone, 5.6%. Not the best day at all for NEO. And I believe they report early in the week on the 7th, which is on Wednesday, right? Yeah, Wednesday before the market. So they're in the morning. And if you guys didn't know, you probably know. But if you don't know, NEO is a Chinese electric vehicle company, right? They obviously sell electric vehicles. That's what they do. And for the quarter, this quarter coming up, and mind you, all these numbers that I'm giving out, these are estimates, average estimates from about 10, 15, 20 analysts, different, maybe the company Docusign had 20 analysts, maybe Kroger had 11 analysts, whatever. But these are average estimates from analysts for the quarter coming up, right? So we're looking at, for EPS, NEO, negative 17 cents. They're going to lose 17 cents on the quarter on revenue of $1.4 billion. So they're still going to make, well, on the top line, they're going to be growing year over year. They're going to do pretty well, $1.4 billion, which maybe not, I guess not pretty well, because they're only going to be growing about 7% year over year, which is obviously a lot lower than what they've grown in the past. Growth has come down a lot for NEO. They're struggling a little bit, as a lot of companies are. This is nothing new, which is why it's not like it's a complete blow to the company. But, growth has come down a lot, no doubt about it. And if you're looking at it like from a growth perspective, the valuation has come down a lot because the growth has come down. I mean, this thing's down 75%. It was at $67. Now it's at 17. You could make an argument now, if you want to take the risk on NEO, anywhere in the mid-10s, lower 10s especially, you can make an argument that it's worth a wild card, or it's worth throwing maybe a little bit of money at it. And me personally, I have NEO. I own NEO. I've owned it for a good amount of time, and I've mentioned this before on the channel. I've owned it, and probably I should have sold a lot of NEO during this run-up. I didn't sell much. That's just the truth. I was buying it in the 3s, the 2s, the 7s, the 12s. I've mentioned this before on the channel many times, and I haven't bought NEO probably in like 2 or 3 years. It's been a long time, but I own it, average probably around $10, $12, maybe $8, because I averaged up on it. And, I should have locked in a lot more profits, but here we are at $17. And at this point, I'm thinking to myself, it's come down a lot. I'm still up. I might as well just hold on now for the long term. What's the point? If I sold out, I should have sold out in the 50s or 60s completely, which I didn't do that. So I might as well just hold on now. And if it comes down to the lower 10s, I might have to add a little bit more. We shall see, guys. Ticker symbol NIO. We're watching it. And again, full disclosure, I own a little bit of NEO. It's a very speculative position. It's probably my smallest stock position at this point. It's very tiny, but I'm still rocking with it. I'm holding on, and we'll see what the future holds for NEO. And let's see what else we got here. We have Gamestop this week, guys, which clearly is selling off in a straight line. Gamestop has come down from $45 to $27. We're talking about 20 days, it's down 42%. So at this point, I think, and we're not getting the reversal quite yet or any signs of a reversal, but I think at some point we're going to get a sharp bounce on GameStop. I'm not saying it's necessarily going to go all the way back to $40 like that. That's kind of crazy. But from where it is now in the mid-high 20s, could it rip back to the low 30s? Mid-30s even? Abso-freaking-lutely. It definitely can. I mean, we had a sharp bounce a couple of days ago where it went from $29. This was on the 29th of, funny enough, the 29th of August. It went from $29 to about $33 in that day. So in that day, from pre-market to where it peaked during the day, it went up 10%. So this is what I'm talking about. I think we're going to get some sort of snapback on GameStop, and this week might be the week because they report earnings on the 7th after the bell, which is on Wednesday. They're going to looking to do on average, again, these are all estimates, they're looking to do negative 38 cents, so they're going to lose on the quarter. Revenue 1.7 or 1.27 billion, not 1.7, 1.27 billion on the quarter, guys. So GameStop, I have my alert at 34. I might have to put another one on there. Let me do another one. Let me put one at mark is at or above. Let's do it at 32 maybe. Maybe actually 30. We'll put it at $30. We'll see what it does from there, guys. And the next stock here, which might not be the most fun stock to talk about or to track, but they're reporting American Eagle Outfitters, ticker symbol AEO. This company has been completely bludgeoned, guys. I mean, I don't know what else to say. This thing was at $26 back in the beginning of the year. Now it's at 11. This thing is down 60%, almost 60% in the past couple of months throughout the course of the year. And there's really no signs of a reversal. And they report earnings on the 7th, which is on Wednesday. A lot of these companies are on Wednesday, I believe. They're after the market, and they're looking to do 13 cents. So they're going to make a profit on the quarter on revenue of 400, or not 400, actually 1.400 to the next company. Let's not skip ahead here. $1.2 billion of revenue estimated for the quarter for American Eagle Outfitters. So this is kind of like the first stock, Docusign. The chart is garbage. It's not one that I'm looking to buy here, but the fact that they're reporting earnings alone, that puts them on my radar for me to watch them, at least for the week, right? We'll see what ends up happening. The next one here is Dave & Buster's, ticker symbol PLAY, which, if you guys haven't noticed, Dave & Buster's has really been doing well in the past couple of weeks. Just a couple of weeks ago, it was at $29.50. Now it's at $42 a share. It is up 44% in the past couple of weeks, which is just nuts. So they report, and there's really no signs of it slowing down. I mean, sure, it's cooled off a little bit, but the chart still looks decent here. They're expected to do EPS of $1.07 versus, actually, I don't even have the estimate there, or none of these are estimates. I'm so used to saying that because I report on the earnings all the time. Anyway, guys, they're looking to do EPS of $1.07 on revenue of $432.91 million. So not too shabby, guys, chart-wise, with those numbers coming up on the 7th, Wednesday after the bell. We're going to have to watch Dave & Buster's, ticker symbol PLAY. And if you haven't gotten your 12 actually stocks from Webull yet with any amount deposited, what are you doing? Use that link down below, deposit any amount of money, and boom, you get 12 stocks from Webull. And if you want 13 stocks from Moomoo, each up to $2,000, you could get those as well with a $100 deposit. Again, 12 stocks from Webull, 13 stocks from Moomoo. Link down below. Get your money, guys. It also helps out the channel. And with that being said, cheers. Let's get into the next stock. We have 4 more stocks for this video. And if you haven't hit that like button yet, what are you doing? Hit that like button. It helps me out overall in the YouTube algorithm. So SWBI, Smith & Wesson, they report this week, I believe, on Thursday. They're on Thursday the 8th after the bell, and Smith & Wesson has not been doing well at all. The stock was at $19 back in the beginning of the year. Now it's pushing 13, low 13s. It's down 30% in the past couple of months. And again, we have earnings coming up with revenue for them being estimated at roughly $130 million. I don't have the EPS estimate for SWBI, but judging off the past 2 quarters ago, they made about 69 cents. Last quarter, 82 cents. So I expect them to be profitable, judging on that, but we shall see on Wednesday or Thursday. Yeah, Thursday after the bell for Smith & Wesson. So the next one is Bilibili, another Chinese company. Bilibili went down 5% on Friday, and this is a stock that, now that I'm looking at it, wow, it's really been flat the past couple of months. Really the entire year since the beginning, really more towards the middle of March. It's been completely flat in the mid-20s, hovering at about $23, $25, going down to the low 20s. And I feel like it's getting ready for a move. It's got to be. There's got to be, and of course, it being a Chinese stock, there's added risk there, but there's got to be a catalyst coming up. Maybe this earnings report that is going to spark the next, breakout or the breakdown on Bilibili. So they're on Wednesday before the bell. So Wednesday or Thursday before the bell. I keep mixing up the days. Thursday before the bell, we have Bilibili. So you got to watch it. Again, we're moving pretty, sideways, horizontally. We got to watch it. We got to set alerts, because if we get anything on guidance, EPS, revenue, whatever it may be, it could spark a breakout. Or maybe it ends up breaking down under 20 bucks, which in that case would not be good at all, technically speaking. So 2 more stocks, guys, 2 more stocks, and these are pretty risky. The last 2 are the riskiest ones for sure. We have Fuel Cell Energy reporting this week, which is a penny stock. It's a penny stock, guys. And I don't really talk about penny stocks. You guys know that on my channel. I mean, if you watch my channel, when do I really talk about penny stocks? Never. I mean, you know that. But Fuel Cell Energy, FCL is the FCEL is the ticker symbol. They're reporting tonight, or not tonight. Why did I just say tonight? They're reporting on Thursday night, or Thursday after the bell. Clearly, my mind is elsewhere as I'm filming this video. What the heck am I saying right now? Fuel Cell Energy, they're reporting on Thursday, right? So they're looking to do -6 cents, which last quarter they did -8. All right, step in the right direction. On revenue of $35.81 million. That's the estimate. Again, these are all estimates. And looking at the chart, Fuel Cell's chart looks pretty decent in my opinion. You know, it got a little hot, hit $5.50 back in the middle of August about a month ago, and now it's clearly come down a lot. It's under $4 a share. So we're talking a drop of 60%. Actually, no, am I reading this wrong? Oh yeah, I read that wrong. Sorry. From $5.50 to $4, that's not 60%. Obviously, that's about 28%. So it's down a lot, clearly. It's at the bottom of this channel. You know, we're slightly under the moving averages, but not extremely under them to the point where it's in free fall mode. So I'm going to set my alert at $4.30. 4.30, mark is at or above, and we shall see. You know, if we start getting buying pressure, do not be surprised if this sees a move towards the top of that channel again. You know, towards it, you know, maybe not at the top, maybe not to $6 like that, but it could start moving towards $4.50, mid-4s, high 4s, right? So the last stock for the video is Ideonomics. IDEX is the ticker, which is literally a penny stock, guys. Literally. It's 60 cents right now. 60 cents. And no, I'm not pumping this penny stock, guys. I'm not pumping the penny stock. So if anyone's out there watching this and they're like, oh, he's a YouTuber talking about a penny stock, I'm not pumping it. I'm just saying they report earnings this week. The stock's up 5% or went up 5% on Friday, a measly 2 cents for a 60-cent stock. 2 cents is 5%. And they're looking to do -8 cents on the quarter, -8 cents on revenue of $35 million. So they're a small company, $35 million, roughly the same as what Fuel Cell is going to do for the quarter. And their revenue is going to be up 220% year over year. So it's a company that has a lot of risk, but clearly they're growing. And does that mean just because they're growing revenue, does that mean they're you know, going to go to the moon and they're going to survive? No, because if they never make a profit, they're not going to survive. But as of now, they're clearly in growth mode. They're expected to do over 200% revenue growth. We shall see, guys. I'm going to set my alert maybe at about 75 cents. I don't know. I'm not really going to trade this considering, again, I'm not a big penny stock guy, but I'm going to watch it regardless for the earnings. So with that being said, guys, I'm going to wrap up the video. We're about 23 minutes in. If you're still here, I appreciate you. Hit that like button. Make sure to subscribe if you haven't done so already, of course. Check out my Patreon if you want to join that. That's linked down below. And do not forget to get your free money, 13 stocks from Moo with a $100 deposit. Each of those could be up to $2,000 is free money, guys. Also, don't forget to get your 12 stocks from Webull with any amount deposited. All that good stuff is linked down below. I appreciate you all as always. And even though the markets are closed tomorrow, I still have to make this video, and I'll probably make another video tomorrow. So I'll see you there. Thanks for watching as always. Peace out, guys.